This is Dustin with Dustin's Dollars. Today I'm going to be going over the AITX quarterly report for the period ended May 31st, 2022 that was just filed today. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position in AITX. It is on my watch list. So this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So I'm going to go through this. I've done some prior videos covering AITX, and folks, I keep getting comments and questions about AITX, so I figured I'd cover this, this new filing for the quarter ended May. And so let me get right into it. Just going to go through some of the highlights, and you can read the whole thing yourself if you are so inclined. Sort of going top down, the first thing I've been looking for every filing that I see, because these are, for me, some of the red flags that prevent me from really from jumping into the stock, kind of regardless of a lot of the other stuff, is number one, I did not see any change to the Class F shares. Right, this is something I have an entire prior video explaining how this works out, talking about what I think the actual implied market cap is of AITX, but you can see here they listed it out as one way to do this, in showing how those outstanding Class F preferred shares and the warrants, I think the warrants really add up to a heck of a lot of shares, right? To 18 million shares, and that's based on the current outstanding share count. And this number will continue to go up as more common shares are issued. So there was no change to the Class F preferred shares represented in this filing. So that's disappointing to me, but not that I necessarily expected. I'm hoping to do something about that in the future, but we'll see. Another one, the other big thing that I have always been looking for a change to is the sale of future revenues that they did. Let me see if I can find that. So it's right here, and in this section you can read through it yourself, or I have a prior video talking about this. And there was no change to this either, right? This is where they've actually sold some of their future revenues to some folks for in prior deals that they made, and it didn't look like there was any change to that that was called out in this filing. So that still remains. So those two things still stay the same. All right. So talking about the actual performance for the quarter, revenue was technically down for the quarter, but I think the comparable, from a year ago was a ridiculously high number. Like it was an outlier. They had a whole bunch of direct sales, right? And so just going to the revenue, right? They sold $385,000, or collected that in revenue. I guess booked it, not necessarily collected. And what that looks like, on the graph, I have the quarterly revenues put here right on the graph. Hopefully this is large enough for you to see. I can zoom in maybe a tiny bit more. There you go. See this big spike here, that quarter, that is actually the quarter from a year ago that we are comparing against if we're looking at this quarter. And that's why, yes, technically this is down from the year over year quarter, but it it is actually, it's not that bad, right? It's not like they dropped. They are actually roughly flat over the past 3 quarters in terms of total revenue. However, the bright spot here is that the rental income, right, the device rental activities actually went up. And I think I wrote it down. It was actually up 90% year over year, right? So even though total revenue was down, you can see here, and I have it broken out, so it's easy to see that the direct sales is really what carried the revenue a year ago, and the proportion of the revenue for this quarter that was direct sales is much lower, right? And you can see that blue line, if we're just looking at that in terms of the rental, that is almost double. It's up 90% year over year. Quarter over quarter is even up 35%. That's actually a pretty nice tick upwards right there, just quarter over quarter, talking about the rental revenue. Now, another thing, and I think I have a graph down here for their margins. Let me see if I can find this. And I noted this in the prior video in their 10K coverage, where it did look like, or in my 10K coverage, where it looked like their margins, or gross margins, were actually going down, forming a downtrend. In this quarter, gross margins, went way down. However, there was actually, they called this out, that there was, they wrote off some inventory. They had a big inventory charge. I think their exact words, inventory adjustments, and it was about on the order of $170,000, somewhere in that vicinity. And so if you back that out, their gross profit would have actually been $269,000, and their gross margins for the quarter would have been almost right at 70%, just a tad, just a hair under. And so that this would have actually ticked upwards a bit. It would have gone probably back in line with where they were, what's that, 3 quarters ago. And I don't think it's fair to necessarily back this out, but it's also not fair to attribute that all of that margin just to this particular quarter. So what I did to try to get a better sort of understanding of what this looks like is if I take that that write-off or that adjustment, whatever you want to call it, of 170,000 or so, and if I average that, if I effectively take that off of the cost of goods sold, or add it to the cost of goods sold from the prior 12 months, then the actual number for the gross margins is more like 48.5%, looking at the trailing 12-month figures. And so, right, because this is just a recognition that these numbers should actually be lower, probably, and this number should be higher if we're actually being honest and spreading that out and not saying that really actually only impacted one quarter, but that this is probably something that we should have been lower the whole time. So we'll see. And that is actually on a view where you assume they are going to have some mismanagement of inventory in the future. If you think that they are going to have, better management of inventory in the future, they're not going to have adjustments like this, then really you should just back it out and assume that this particular quarter was gross margins of 70%, and that the prior quarters were, indicative of the future, and that this was just a one-off thing. So my prior statement that, if you average it out, that gives you a better picture of how things would be, assuming that you're going to have some sort of this impact over time, because they're never going to be perfect. This gives you an actual way to estimate. It gives you a data point to use in forward projections. So moving along, a couple things to note. This was already reported, but they paid off a good chunk of a lot of these smaller loans that were on their balance sheet here. And you can have them listed out here, right? And it was nice that they put this little annotation here for all of these loans. These were the smaller loans, right? None of these are the I don't think any of these were multi-million dollars. These were all hundreds of thousands, or some of them even smaller. All got paid off in total, as again, I think this was noted on the 10K already, but they paid off about $1.7 million in principal balance, with some additional interest there in March of 2022. And now they have less loans on their balance sheet, and nothing is due until December of 2023. So they do have some runway, let's say, in terms of how long they can go just paying the interest or managing the interest somehow, and I'll talk about that in just a second, without having to pay back any principal, right? So they do have a little bit of breathing room. They have some time to grow and see how they can, how close they can, how they can grow revenues, and how they can put themselves in a better position before some of these come due and they have to figure out what to do about these particular loans. Now, the one thing that was called out here is that the company was in default on some payments on some loans as of May 31st, 2022. So they were in default of 181,000, and these are some of the payments. I think this might be from their sale of future revenues, although I guess I'm not completely sure. No notices have been sent to the company, right? But that's not really a good position to be in. So, I will certainly be keeping my eye on that. That's still a fairly small number in terms of the total economics of the company, but that can, if that grows, that's clearly not a good direction to be going. All right. Now, there was also a note about the where's this at? Let's see if I can find it. Yeah, so there was certainly the note about them, the going concern here, and this I think is they called out management plans to raise an additional 15 million to 50 million before the end of the fiscal year. My guess is that this refers to the, I think, 1 billion of additional shares that were just called out recently. And I got a comment from who was it, Pedro, I think, on one of my prior, sorry if I got it wrong, if I trying to remember. Somebody called that out to me just a couple of days ago, in a comment, and so that was recently announced that they're going to be adding on an additional 1 billion shares, and we'll be selling those. And here they're calling this out as they plan to raise an additional 15 to 50 million dollars. It's hard to say how much they'll actually get from that 1 billion, right? I think at the current, just as a general note here, at their current share price, which I think is like 1.3 cents roughly. I think it's 1.32 cents. I guess I could just look it up real quick. But the thing to keep in mind, right, is 1.32 cents. And so if we were looking at that times a billion, that's going to net them $13.2 million. Now they do pay fees, and then in the prior raise that they did in their purchase agreements, they were actually selling the shares at a discount, or roughly a 10% discount, if I recall correctly. And so they ended up getting more like somewhere around like 88 cents on the dollar in terms of money that actually came back to the company. So if I looked at their current share price and assume that they're going to get a similar purchase agreement, then they're actually, at the current share price, they would net more like slightly under $12 million with 1 billion shares. And again, that's assuming the share price stays where it is. So it will be interesting to see how this plays out in terms of, what they can actually get for those shares, and what purchase agreement they're going to make. So if you are an investor in AITX, it's certainly something I think you should be watching for, and listening to management, is what is their actual plan for selling these shares, right? Because just having shares, I think if you just dump them on the market and sell them on the exchanges, right, like you're going to get a different result than if you have other agreements, and the details of those agreements can matter a lot. Now, one other thing that was actually called out explicitly in this particular 10Q that I hadn't seen in the past, maybe I missed it, was, and I'd noted this before, that they have these related party charges, but I guess I hadn't made the connection myself that this was actually their research and development, because it's pretty stark when you look at these numbers. We look at the 3 months ended May 31st, 2022, right? The company, AITX, spent, or at least booked for accounting terms, for accounting purposes, $1.02 million, right? $1,023,000 of R&D expenses. However, this says that includes related party charges of almost $1 million. You're just a tad over $1 million for that R&D. And so if you do the math here, that's almost all of it, right? That's if I subtract out 1023735 minus 101734, this only represents an additional $22,000 in R&D over 3 months. And that was a little surprising to me, because I think like $22,000 over 3 months, multiplied by 4, that's $88K. I'd be surprised if that was paying for even one engineer, just given how salaries are. Maybe it's paying for one engineer there, but that to me implies that all or the vast majority of the R&D that a company is doing is not in AITX. It's actually in a related company, because so I was trying to understand this, and I'll have to do some additional research, and maybe I'll make a follow-up video if anyone was interested. Please leave a comment if you are. If not, I'll keep it to myself, whatever I find out. But I think there was some talk here of like this is in a related company that is owned by a principal shareholder. That's like kind of what the what the language is here, which says this isn't in, you know, those folks doing the R&D are not in AITX proper. And so I thought that was very interesting. Made it raised some questions for me that I'm not going to go into too much here until I really understand what the situation is. But that was surprising. It hadn't really been such a hadn't been as much of a big deal to me in the past, when I guess I'd seen some of the related party charges, but hadn't realized that it was such a large portion, honestly, like almost all of their R&D that's going on. So, you know, if anybody knows more about that, please let me know down in the comments. I'd be super, or you know, email me. My email is you can find it on my channel page. Just click in there in the profile, and you can send me. It should have my email address on there for the channel, and yeah, I would really like to know what's going on there. So yeah, overall, that's my take on the quarter. You know, let me know what you thought or what questions you had in the comments below. I will check on the, see, is there anybody on the chat right now? Not today. Just for anybody who is still watching, I do these videos usually in the evening in Eastern US time zone, you know, 9, 10, 11 p.m., somewhere in that vicinity usually.